Where's the dollar headed from here? That's what you need to know before the bell. One of the big trades this year so far, at least early this year, has been buying non-dollar denominated assets like emerging markets and international. And part of that has been predicated upon this weaker dollar environment. And of course, last year, the big story was that continuing strong rally in the dollar. Of course, everything in the world is traded against the US dollar. So again, commodities, everything else is all based upon US dollar. So a stronger dollar makes those things more expensive to foreign consumers. A weaker dollar obviously makes those things cheaper for foreign consumers. So again, as the dollar weakens, then that potentially bodes better for, say, exports of goods and services, as well as commodities, etc. And of course, the weaker dollar as of late has been helping commodities like gold, which has had a fairly decent rally since this peak in the dollar, as you would expect. Also, in terms of emerging markets, international, those economies also improving as well. The question is, of course, has that trade gotten ahead of itself this year? Well, that really depends upon your outlook for the dollar. If the dollar is going to continue to weaken, then those trades do have some legs. Now, of course, one thing to remember, investing in emerging markets or international is fine on a short-term basis, and there's certainly tradable opportunities, but those have been major underperformers relative to the U.S. stock market over the course of the last 12 years. So if you wanted to be invested in anywhere, being diversified into foreign and international stocks has not been a good investment. Gold miners, gold has underperformed, as an example, since 2009 relative to U.S. stocks. The question now, of course, is that dynamic changing? That all comes back to the dollar because, again, the dollar impacts all of those commodities. Currently, the dollar is getting extremely oversold here, and we've seen this for a while. We've had a very long period where the dollar has declined at this point, has broken through all of its major moving averages, and currently right now is sitting on important support going all the way back here to June of last year. So again, here was that peak in the dollar, got a little bit ahead of itself. We had talked about the dollar getting very overbought at that point. This correction, not surprising, but also at the same time we're seeing this correction again. We're seeing bull markets in emerging market stocks, international stocks, as we're going through this dollar correction. But again, pay attention to where we are, because if we get into a soft landing environment in the economy, right now investors are about split on whether or not we're going to have a recession or a soft landing. If we do have a better outcome in terms of the economic environment, that is going to bode better for the dollar. That will attract foreign assets into the dollar strength because of a stronger economy. A much weaker economy obviously would suggest lower dollar. So it's really kind of where you're betting here in the near term. But pay attention to the fact we're about to trigger a very short-term buy signal in the MACD that would suggest to see a rally here a bit in the dollar. The dollar is extremely oversold, has remained oversold here for a very long period of time. So again, a lot of that dollar bias that we had last year has been unwound, and that suggests that somewhere in here you're probably going to get a decent reflex rally in the dollar. That doesn't mean a new bull market necessarily, but what it does suggest is that if you've got a lot of emerging international or commodity-based exposure, you may want to think about taking profits here, because again, if we do start getting a counter trend rally in the dollar for any reason, you're going to see a pullback in those assets. I'm Lance Roberts, and that's what you need to know before the bell.